What if I told you that you could learn the most important lessons about investing with just $100? Well, in this explainer, we're going to break down an experiment that did exactly that, splitting a small amount of cash 8 different ways to find some really surprising truths about money. So let's get right into it.
This is the big question, right? We're about to see what happens when you put the absolute safest of savings up against the wildest of gambles. In over just a month and a half, this little experiment is going to reveal the fundamental lessons of risk, reward, and really what investing is all about. And to make all of this super relatable, we're going to follow Mark. He's our experienced investor, as he guides Tom, who has literally never invested a single dollar in his life. Just think of Tom as our guide here. He's going to be asking the exact questions you're probably thinking right now.
Okay, let's dive into the investments themselves. We're going to walk through each of the 8, one by one, to see not just how they performed, but what crucial, and I mean crucial lesson each one has to teach us. First up, the high-interest savings account. And yeah, a 4-cent profit isn't going to make you rich, but that's not the point at all. See, this isn't for growth, it's for security. When you think about how many people are living paycheck to paycheck, having a safety net for a flat tire or a broken boiler is an absolute game changer. It's less about the tiny bit of money you make and more about the high-interest debt you can avoid.
Next, we've got gold, which you'll notice actually lost a little bit of money here. So why on earth would anyone invest in it? Well, the key word is inflation. Since 1913, the US dollar has lost about 95% of its purchasing power. Gold, on the other hand, is finite, so it tends to hold its value. You can think of it like an anchor for your wealth in a sea of devaluing currency.
Okay, now we're getting into the stock market with the S&P 500 Index Fund. Basically, this is where you get to own a tiny slice of the 500 biggest companies in the US. We're talking Amazon, Apple, Tesla, all at once. It's just a brilliant way to spread out your risk so you don't have to be some kind of stock-picking genius. And this analogy just illustrates the whole concept perfectly. If your one and only cow gets sick, well, you're out of milk. But if you own a tiny piece of the whole herd and one cow stumbles, it barely even affects you. That, right there, is the power of diversification in one perfect sentence.
Okay, but I know what you might be thinking. You're looking at that profit and going, $1.84? Seriously? Is that it? And you know what? That's the exact question a beginner would ask. It's a totally fair point. So, what's the big deal? And this is the big deal. It's something called compounding. If you invested just $100 a month, that's it, the cost of a few fancy coffees. At an average 8% annual growth, it could swell to over $500,000 in 45 years. That tiny little profit isn't the story. It's just the first page of a very, very long book.
Ever wanted to be a landlord but without the hassle of tenants and toilets? That's pretty much what a REIT, or a real estate investment trust, is for. You're investing in a company that owns commercial properties, and they pay you a share of the rent they collect. That 11-cent profit you see, that's a dividend, which is essentially your cut of the rental income. And here's another fantastic way to think about it. With a REIT, you're not buying the whole building. You're just buying a few bricks, or maybe a window. But you still get paid like you're the landlord. It's a super accessible way to get into the world of property.
All right, now we're shifting gears, moving away from those passive investments into something much more hands-on. A good old-fashioned hustle. Our expert Mark used his knowledge to find a totally underpriced model engine on eBay. He spruced it up and then sold it for a really nice profit. The lesson here? Your own knowledge can be an incredibly powerful asset.
You might think a successful stock pick needs hours of deep financial analysis, right? Well, this one was chosen by literally throwing a dart at a board blindfolded. No joke. It landed on Samsung, and the investment did incredibly well. This is such a crucial reminder that with individual stocks, sometimes timing and just pure dumb luck can play a massive role.
And then there's Bitcoin, the absolute superstar of this experiment, which nearly doubled the initial investment. It's decentralized, meaning no single company or government controls it, and there's a limited supply. But that high-risk rating, a 9 out of 10, is there for a very good reason. Its value can swing wildly. It's definitely more of a financial roller coaster than a steady climb.
You know, this comparison just captures the two extremes of our experiment perfectly. You have the rocket ship of Bitcoin on one side and the shield of a savings account on the other. And listen, neither one is inherently better, they just have completely different jobs to do in your portfolio. Understanding that difference is one of the most important first steps for any new investor.
And finally, we have scratch cards. Let's just be blunt here. This is not investing. The results really speak for themselves. a $50 loss. And while yeah, about half of all Americans try their luck each year, the odds are just massively stacked against you. So the crucial point here is, this is a lesson in what not to do.
So after tracking all 8 of these investments, from the safest to the absolute riskiest, what was the final result? What was the grand total? Let's look at the overall performance of this little $800 portfolio.
An 11% return in just a month and a half. Now, to put that into perspective for you, the average annual return for the stock market over the long term is about 10%. So this little experiment didn't just teach us some lessons, it actually delivered some pretty incredible results, all thanks to a mix of smart diversification and, yeah, a little bit of luck.
Okay, now for what I think is the most practical part. After learning all these lessons, our beginner, Tom, was given $800 to build his very own portfolio. This is where the rubber really meets the road. How does someone new to all this actually apply this knowledge?
Well, Tom immediately put his new knowledge to work. He kicked out the savings account and the REIT because of their low profit. He saw that gold lost money in the short term and said, no thanks. He was tempted by that business flip, but he was smart enough to recognize that Mark's expert knowledge was a huge advantage that he just didn't have.
And this is where he landed. He built a 3-part portfolio that actually shows a really clear strategy. He anchored 25% in the safe, diversified S&P 500. He took a calculated risk with another 25% in high-reward Bitcoin. And then he put the biggest chunk, half of it, into individual companies he was personally excited about, Tesla and Google. It's a fantastic example of balancing a stable foundation with some big, exciting swings.
And that brings us to the final and maybe most important question: what about you? After seeing all these results, if you were handed $800 today, how would you build your portfolio? Would you play it safe? Or would you aim for that high growth? Or maybe try to find a balance somewhere in between? There's no single right answer, but just thinking about it, well, that's the first step on your own investing journey.